I invite Dr. Jigar Parekh. He's going to discuss on exchange traded funds, new star on the horizon.
વેરી ગુડ આફ્ટરનૂન ટુ એવરીવન. મારું લેક્ચર છે ને એક બાજુ નિશ્ચિત સરનું ને એક બાજુ ગૌરવ સરનું, એટલે મને સેન્ડવિચ કરી દીધો છે. અને આ ETF મારો ટોપિક એવો જ છે. ઇટ ઇઝ અ સ્મોલ સબસેટ ઓફ વોટ વી હેવ સીન. એટલે ઇટ ઇઝ અ ટાઈપ ઓફ ફંડ. You can say it is a mutual fund, but it is an exchange traded fund. So I'll go by the definition first. Like any other fund, it is a fund. It's like a basket of a stock, commodity, bonds, or any asset. You can create a fund out of any asset. But the main difference between a mutual fund and an ETF is that it is a tradable fund. આપણે લાસ્ટ આની પહેલા લેક્ચરમાં જોયું કે NAV is published once in a day. રાત્રે 8 વાગે 9 વાગે ખબર પડે. We know what is NAV, એટલે per unit price હોય, that is the net asset value. But NAV in an ETF is published every 15 seconds. અને આપણે સ્ટોક જેમ ટ્રેડ કરતા હોય માર્કેટમાં, you buy stock of Reliance, Infosys, TCS. That way you can buy an ETF. Every 15 seconds you get an NAV. You go to a broker site and you can purchase an ETF. So it is traded like a stock, but it is a fund. So it is called an exchange traded fund. A short history, like anything in the capital market, everything starts from US. So this concept of ETF again came from US. The S&P 500 એ લોકોનું index છે ને, that they tracked that index, created a fund. It is SPDR. And incidentally, it is the largest traded security in the world right now. And India, the largest traded ETF is Nifty Bs. I think most of you will be aware of it. Initially, it was with Benchmark. Currently, it is with Nippon India. So Nifty Bs is probably the most important ETF for us as a regular retail small investor. Nifty Bs is the fund for us. The asset under management of ETF is gradually rising in India, and you can see it has reached about 2.5 to 3 lakhs a year, about 3 trillion right now. So principle, as I discussed, it is a best of both. Like a stock, it is traded. Like a mutual fund, it is a basket. So you have automatic diversification and you can trade like a stock. But it is a passive investing model. There is no fund manager. Fund manager એનું કાંઈ મગજ હલાવવાનું નથી. Suppose your fund manager is creating a Nifty B, then all he has to do is track the Nifty 50. There are 50 companies which is revised semi-annually. 30 જૂન આવે, 31 ડિસેમ્બર આવે. NSE વાળા પોતે જ કરી નાખે કે આમાં 50% રાખવાના. યસ બેંક ખરાબ છે, કાઢી નાખો. બજાજ ફાઇન સૌ સારું છે, રાખી નાખો. The fund manager has to do simply he has to replicate that Nifty 50. He is not supposed to apply his mind. એટલે આમાં ફંડ મેનેજરનો જે રિસ્ક છે ને એ નીકળી જાય. The only risk is the macro risk, કે ભાઈ કોવિડ આવે તો નિફ્ટી નીચે જાય તો તમારા બીજ નીચે વયા જાય. If Nifty is rising, the Nifty Bs will rise. So there is no fund manager risk involved, but it is a passive investing thing. So there is no active management as such, and that is why the expense is less. Because fund manager is not using his brain, therefore he cannot charge us more. So expense ratio for Nifty Bs is somewhere around 0.5, 0.6. So they track either the index, or sometimes the funds, the ETFs are created to track certain sectors. Like there are bank Bs which track bank Nifty, or there are certain ETFs like gold Bs, silver Bs which track the gold price and the silver price. Or they can be created to track any asset. There are many ETFs, more than 100 ETFs are currently traded in India. But the types are basically 3 types are available: equity ETFs, debt ETFs, and commodity ETFs. You can go through the whole list. If you search ETFs available in India in Google, you can find about 100 ETFs. But probably we will just discuss those which are of practical implications to us. So these 3 things which we need to know. Just like a stock has a market price, ETF ની પોતાની એક market price હોય, which is based on the NAV. NAV is published on the AMC site. It is published every 15 seconds, and accordingly the price fluctuates during market hours from 9 to 3:30. And that NAV, INAV, it is called INAV, indicative NAV, that we need to know in order to buy or sell. And tracking error is one thing. Like if we have a fashioned Nifty Bs which is tracking a Nifty 50, then there is always some tracking error. Fund manager tries to replicate the index, but there will be some error which is usually around 0.4, 0.5. એટલે સપોઝ નિફ્ટી રિટર્ન 12% હોય એક વર્ષનું, તો એ 11.5 થી 12.5 વચ્ચે નિફ્ટી બીઝનું રિટર્ન હોય. સો દેટ ટ્રેકિંગ એરર યુ હેવ ટુ બેર. સમટાઇમ્સ ઇટ ઇઝ મોર, સમટાઇમ્સ ઇટ ઇઝ લેસ, બટ lesser the tracking error better, because our target with any ETF is not to generate alpha. We have to manage with the beta. Beta is how efficiently it is tracking the asset which is trying to track. So that is our target. This is the whole ecosystem, but for us it is actually this stock exchange. This is not for us. Primary market, ETF units create થાય, AMC create કરે, liquidity providers આવે, બધું કરે, but ETF shares units are created and then they are traded on the stock exchange. So આ આપણે છે buyers and sellers, and this is the secondary market, તમારી whatever broker you are using, any site. So that is the ETF ecosystem, and I will show you. These are the 6 ETFs which are of practical implication as a passive investor, as a retail investor, which is available to us. The Nifty Bs, which tracks the Nifty 50, this is the tracking error. The junior Bs, they track the next 50 companies. Like Nifty 100 માંથી Nifty 50 બાદ કરી નાખો તો જે 51 to 100 market cap વાળી હોય, that is being tracked by the junior Bs. Then there are sectoral ETFs also, and this is bank Bs we'll discuss. It tries to track the bank Nifty. And liquid Bs, it is like a debt ETF. It tracks one day return, જે one day rate index હોય, RBI rate publish કરે કે per day કેટલું interest rate મળે, accordingly it tries to, there is an index, and liquid Bs is a debt ETF. It gives almost a fixed return in the form of more units, and we will see the utility of that index later. And there are gold Bs which track the gold price, and one there is this N100. It is by Motilal Oswal Asset Management Company. It tries to track the Nasdaq 100, the US index. But if you see, the tracking error is quite less. Bank Bs નું થોડું વધારે છે, but the fund which is useful for us, these two, Nifty Bs, Junior Bs, their tracking error is quite less. So let us say I am investing, એક Nifty B ની price 171, this is the rough price. I will see how it is calculated. So તમારા 170 રૂપિયા, how it is invested. So 21 rupee goes into Reliance, 14 into HDFC Bank, 12 Infosys. This is how it is distributed. એટલે you are quite confident કે one company, one sector, one industry may fail, but it is unlikely that Nifty 50 as a whole will fail. And if that fails, anyway we are not going anywhere. જો ઈ થયું તો બધાય મ્યુચ્યુઅલ ફંડ, બધી ઇન્ડસ્ટ્રી, everything will collapse. So Nifty 50 is least likely to collapse because it is a benchmark for the Indian economy per se. So by investing in Nifty Bs, you are investing in the Indian economy rather than any one industry or one sector or one company. So this is how you can search. The broker site, you can search Nifty ETF. You will find this is the most liquid one, Nifty Bs. Rough price calculation, you divide the price of, let's say, this is, I have taken this screenshot live, 15,700 હતું Nifty. You divide that by 100, that becomes 157, and you add 15 because that is the roughly the dividend which is being which is calculated for the 50 companies, and this is the rough price, and that was the market price. It is quite close. So this is rough calculation. This was the actual market price. And if you want to go further into the detail, then you can search in Google INAV of Nifty Bs. That is the indicative net asset value. And you will see that this is the current INAV, the time when I took the screenshot. So it is quite close to the market price. So all you have to do is search the INAV on Google, find the current INAV, put that limit order with that INAV in your broker site, and most likely it will be executed. Then there are the bank Bs. It tries to track the bank Nifty. And again, if we see, if you invest 100 rupees, 27, almost 50 rupees go into these two banks, and rest about 35 rupees go into these large three banks, SBI, Kotak and Axis. And then remaining 20 rupees in the small banks. So total CAGR since inception is about 80% for bank Bs, because any country has to grow, it has to grow on credit, and banks give credit. So individual banks like Yes Bank, whatever, Bandhan Bank may fail to perform once in a while, but overall banking sector cannot fail. So it is one way to invest in the banking sector of our country as a whole. Then there are junior Bs which tracks the Nifty next 50. So these are the company 51 to 100. And CAGR since inception is quite impressive, 15%. They are the smaller large cap companies or the larger mid cap companies. There are no small cap companies in junior Bs. And this is another equity ETF which you can, you know, you are paying money to Apple, Amazon subscription, and Netflix subscription. You are trying to think, paisa, if you want back, then there is this one way. It's a NASDAQ 100. They try to track NASDAQ 100. And you can say you diversify geographically. But there is one glitch that it is a very tech heavy index. 54% is invested in the technology companies, 5-6 Facebook, Google, Amazon, Apple, so but still it is, you can you know, tamaru equity investment, let's say 40-50,000 karu e mahina, you can probably 2-3,000 you can buy this N100 to get geographic exposure. Otherwise it does not make much sense. So these are the points to remember while buying. You always place a limit order while buying an ETF. You look at the INAV on the AMC website and you try to buy ETFs with good liquidity like Nifty Bs. For practical purposes, Nifty Bs, Junior Bs and Bank Bs should do our job. And I will, this liquid Bs have a purpose. If you are waiting for an opportunity, tamara broker account you don't want to transfer from the bank, you want to keep extra funds, then you can buy liquid Bs, keep in the broker account. It will give you interest at least comparable to the saving account interest. And immediately when you find some opportunity, you can sell the liquid Bs. 80% of the fund will be available to you straight away for buying and on the same day, and that you can use that opportunity. So liquid Bs are just to, you know, as you keep in the trading account for a suitable buying opportunity, and FNO traders know that how to use that for margin as well. So this is just a demo portfolio which I have created. Let us say you are investing for someone who is young or someone who is starting out. You are investing 50,000 per month. Then you can easily allocate, let us say 60-70% you want to allocate to equity. Then you can divide that 35,000 into Nifty Bs, 10% that is around 5,000 into gold Bs, and remaining 15-20,000 into debt, that is liquid Bs, and that you can use whenever you want to, you find a suitable opportunity. But that allocation may change according to your age and appetite. But that easily allocation can be fashioned with the help of ETFs, and there is you automatically diversified. So just to conclude, it is an appropriate investment tool. It is very simple to execute. There is no ratios, nothing to calculate. It's low cost because expense ratio is very less, because everything is done by the NSE. Fund manager has just to replicate whatever it is done by the NSE. There is automatic diversification because you are investing in the index, not in individual companies or industries. And you are investing in the Indian economy. And everyone who is sitting here believes in the idea of India. That is why we are here. We are investing in the stock market because we are believing in the idea of India. And why I believe in the idea of India and why we should is just to give an example. This is a small village on the Indian border. We went this May. And you know, there is cake pasted on both of us, and here there is one Muslim guy, these three are Buddhist, these two are Punjabi, and one is Hindu. And it is a very plural and a progressive country. And what happened in the US and China in the late 90s and early 2000s is going to happen in India in next 20 years. We are on the verge of a takeoff, and you don't want to miss that flight. So that is why you should invest in India, and that is all I have to say. Thank you.